At the end of last year, in December of last year, and I said specifically that this would be the year for gold and silver, and bam, look at what has happened to these assets. They've gone up respectively 20%. This will continue. We're in a consolidation period right now. I do think we're going to see a little pressure here on these assets. And why? Because we've had such an incredible run. Nothing goes up in a linear fashion. So we could see, again, I'm just speculating here, a little bit of a pullback, which would be extremely healthy and set us up for another major run higher.
It's been 115 years since investors had an opportunity like this. The energy of the future. Now Elon Musk and Frank Giustra are betting big on the rise of this energy source that will change the world. We're talking about the oil of the 21st century. Learn more at crushthestreet.com/charge.
Hello, everyone, and welcome into crushthestreet.com. I got a returning guest today, Gregory Mannarino of traderschoice.net. Now, the last time we talked, markets were melting down. Oil was at $26, and he's pointed out that there are central banks have created major distortions, massive distortions in the environment. He's a technical trader with a great handle on the economy, and in 2015 he actually called the market top. He offers a premium service at his site, and it's the best price. It's all free. So Gregory Mannarino, he's a great guy. Thanks so much for joining me today.
It's great to be here. Thank you for having me back.
Greg, as I said, the last time we talked, the markets looked a bit different, and I want to get your take on what we are seeing here, and do you believe it? Do you believe this rally that we are seeing here in March 2016?
Do I believe it? Well, I'm trying to capitalize on it. I did tell people actually on the 10th of this month that we would see exactly what we're seeing now. If people are interested in having a look at a chart that I had made with regard to what is occurring right now in the market, it's on my website, traderschoice.net. I put it up there on the 10th of this month. I told everyone that we could expect this market to do exactly what it is doing right now. And do I believe it will last? No. I think we're getting very close to a top here. And what does that mean? Well, we should be getting ready, if you're a trader, to short this. We need to take advantage of the, I don't know another way to put this, of the grand fakery that is occurring right now. The Federal Reserve, we just heard from them last week with their incredibly dovish comments here, cutting their rate forecast schedule from 4 to 2 hikes this year, despite the fact that they're talking out of both sides of their mouth, saying, oh, the economy is doing well, we're almost at full employment, but the economy is obviously not strong enough for another supposed quarter of a point rate hike, which never happened. I mean, I tell people, the Federal Reserve announced they were going to raise rates last year. It never happened. And where's the proof of that? Just look at the bond yields. The market's not buying it. The Federal Reserve is still creating an environment of risk here. There is politics playing directly into this. We've seen this before in every single election cycle in recent history and far back history, where the party in power colludes more directly with the Federal Reserve to try to prop up the markets. And that's all it's what is occurring right now. And going back to why this market has rallied here, let's look at crude oil, which you had brought up. I had been saying for the longest time on other interviews, and I've been trying to broadcast this on my own show, that crude oil is a currency. They would not allow it to fall any lower. There is too much leverage against it. So what did they do? They're starting to swirl around the prospect that there might be some kind of a freeze here. We know there's no increase in demand. So, what has happened here? We've seen crude oil bounce higher. It's pulled the markets with it. Look, the bottom line is this. These distortions that you spoke about earlier will correct to fair market value no matter what they try to do. The world's central banks colluding with their respective governments or vice versa. I mean, this is the way it is. So we can expect a massive reset at one particular time. When is that going to be? Who knows? When the market wakes up to this entire Ponzi scheme, debt-based economic model that is not working anymore, and all world central banks are doing is propping it up. And there's going to be I can't stress this enough, a terrible price to pay for this for people that are on the wrong side of it.
So in 2015, we saw oil go down to 40 and then spike back up to 60, the $60 range. I'm kind of using round numbers here. And right now, we saw, in the recent history, we saw oil go down to around 26 and then now up to 40. Do you think that we could see oil continue to go below its last low? And, you already alluded to this. Higher crude oil prices seems to be a must for the stock market.
Mm-hmm. Absolutely. Well, I do think that it is more than possible that we will see crude oil pull back again. Where will it go down to, I'm not really sure. Again, because we have to understand, we're looking at any asset class at this point. I don't care what you want to look at, whether it's a debt, whether it's housing, whether it's precious metals, whether it's the stock market, nothing is real. I cannot stress this enough, and I want to put a perspective on that for people that maybe don't understand how the entire system works. What people are focused on is what the stock market is doing. They don't think about anything else. They don't think about the fact that we are in the greatest debt expansion cycle the world has ever seen, being fostered by runaway central banks, again, colluding with their respective governments to suppress interest rates. If interest rates are not real, and they're not real because, again, of this interest rate suppression cycle, no other asset class, and I mean none, has a real price discovery mechanism behind it. So everything is priced off of the debt market. So if we have a debt market that is being artificially suppressed by, again, this artificially manipulated interest rate environment, nothing is real. Not one asset class you can say is priced fairly. And to try to gauge where it should be is a monumental task.
So, Greg, I'll just jump in right there. You are a technical trader, and using the charts, you're going by something to predict and to kind of anticipate what we can expect going forward. But how can you do that with what you're describing, with unprecedented circumstances, which will have unprecedented events take place?
Exactly. And that's the beauty of this from a trading standpoint here. If we all are keenly aware that nothing is real, and we also understand that world central banks have no alternative but to continue to inflate and distort asset prices, we can get on the right side of that trade. It's that simple. We know, I did a whole video about this recently. In fact, it's available on my website, traderschoice.net, right on the front page. If we understand that, again, world central banks are in this interest rate suppression scheme unlike we've ever seen in the history of the world, we know where the opportunities lie as investors, as traders, to take advantage of this. I mean, just as an example, when I posted that this market was going to be riding higher earlier in this month here, I had placed 13 trades. Out of those 13 trades, 11 of these have been successful. It's unbelievable. Again, this is just part of understanding that the manipulation is there. This is what we need to do to capitalize on it, period. We can't just sit back and let things just, run amok here when we can capitalize on it. And again, let me just go back to my premise. Since I sat down years ago in front of a computer and started talking about this stuff to people, is we need to understand that we need to bet against this debt and become our own central bank. And that just boils down to this: acquiring hard assets. At the end of last year, in December of last year, I was on Greg Hunter USA Watchdog Show, and I said specifically that this would be the year for gold and silver, and bam, Look at what has happened to these assets. They've gone up respectively 20%. This will continue. We're in a consolidation period right now. I do think we're going to see a little pressure here on these assets. And why? Because we've had such an incredible run. Nothing goes up in a linear fashion. So we could see, again, I'm just speculating here, a little bit of a pullback, which would be extremely healthy and set us up for another major run higher. So just understanding the dynamics of this entire thing and the fundamentals behind it. Again, yes, I am a technical trader, but I also I'm keenly aware of the fundamentals that are driving it. Right. You can't just be one of these things. You have to sit back and take into the account what is occurring with regard to world central banks, what they're determined to do, and then we can put this all into a perspective and understand what we need to make happen to capitalize on all of it.
You know, I couldn't agree with you more, Greg. Excellent insight there. I'm going to ask you this question coming to you as a pundit. However, talking about the stock market and what we saw in the early part of 2016, could we say the stock market correction built support at these levels and therefore was healthy for more growth going forward?
Growth in the stock market?
Yes.
Well, I think, again, we topped out. I called the top of this market almost to the day in last May, almost to the day.
You sure did.
Very accurate there. And we've seen the market, pull back substantially. Now, yes, we've seen the market regain some of that after a pullback. I do not believe we're establishing a floor here. Again, I think a lot of this is, I would call a fool's rally here. Earnings are not where they should be. And again, the reason why we're seeing what we're seeing in the market is because world central banks are broadcasting to the world that they are going to support their markets by suppressing interest rates. So what does that mean in the grand scheme of things for people that are investors? What people like myself are looking for is some way to capitalize on what is occurring. So where are you going to be? You're going to be in a bond that has a negative real rate, or you're going to try to look for some to grow your cash in an environment where world central banks are going to continue to inflate it, but it won't work. All of this will correct to fair value at one point. I do not believe, at least at this point, that we are going to regain the highs that we had last year. I believe, again, we're getting set up here for a pullback in this market. It could be substantial. So we'll just have to see where this all plays out. It's very difficult to say where this market is going to be, let's say on a day-to-day basis. And people always ask me that. It drives me insane. So forget about trying to day trade. It doesn't work. Anyone who's listening here, it does not work. And the day-to-day market action is nothing but noise. We need to look out a little bit further. I am a short-term trader, meaning I hold positions from days to weeks. And to see how this is all going to play out. But the longer term prospects here are very, very bad. Because why? We understand the environment we're in, and that is this horrid, and I'm going to refer to it as horrid, debt suppression cycle, which is, again, fostering a mechanism where there is no real price discovery mechanism behind any asset whatsoever. So what we can expect will happen is this will correct to fair market value. Now, what we need to do is just understand, again, from a long-term prospect, what that means. And frankly, that means the debt can never be paid back. We know this. It's an asset that is worthless. And the world central banks are proving that by, again, going negative interest rates, continuing to suppress it. So they understand that. All of this is going to, again, correct the fair market value. We will see bond yields spike at one point, and it's going to be rapid and ugly. When that happens, that's going to put an enormous amount of pressure on the stock market. You are going to see both of these assets sell off rapidly. Cash is simply going to look for somewhere to go. And it's going to go into hard assets, in my opinion, because, again, it's just going to seek a place to go that is undervalued. So we understand that world central banks continue to foster an environment of risk via their interest rate suppression. So what's happening is we're seeing bond yields remain really low. We're seeing the stock market go higher. But once this risk on trade becomes a risk off trade, because this is going to happen. We've seen this over and over and over again. We're just going to simply see a movement of cash from these risk on assets to risk off assets. And in my opinion, nothing is more undervalued right now than precious metals. And if I want to go one step further, I will say that it is silver, which I've been saying for years now, is the most undervalued asset in the history of the world.
Wow. Let's jump right over to silver then. I think the case you made applies across the board for precious metals, but let's jump to silver. When it comes to silver just reaching its high in 2011, I mean, we got to see silver get multiplied by over three times. That's a 300% return. Gold, if it would be much higher if we multiplied it by 3. What are you expecting for silver here in 2016? I mean, are we going to continue to see these big double-digit gains each month? I know that's a tough question to answer, and I guess that's not where I want to go with it. But more on the technical side. I mean, we talked about the fundamentals. What did you see in December that on the charts and from the technical perspective that is making you bullish for silver?
Well, I've been bullish. Even when silver was at its high, I was still bullish there. I thought it was undervalued then, and I know it's undervalued now. Let's look at the ratio of gold to silver right now. It's somewhere around 80 to 1. It's incredible. So what does that tell us? The potential for gains holding physical silver right now are staggering, absolutely staggering. Let me say this with regard to longer term prospects with regard to precious metals. And I outline this in my absolutely free 197-page ebook, Ultimate Guide to Money in the Markets, which is available on my website, traderschoice.net, is this. I believe that we will see gold at twice the Dow at one particular time. I believe we are going to see Dow 6,000 at one point. So that'll put a perspective on where I believe gold will be at one point. And we can see, and so again, look at what that means for silver. 500, 600, 700, these are potential gains. Even if it goes 1 times the Dow or equals the Dow, gold equals the Dow. Again, think about the gains that we will see. And understand why we're going to have this. Again, we are existing in an environment of complete non-reality. Everything is being distorted so badly that it's very difficult for any person to get their head around it, anyone. And I talk to people about this, as you can imagine, all the time. And even myself, I try to sit here and ponder it. So I always look at things from a worst case scenario. That's what you have to do. You always have to be prepared for things from a worst case scenario. So in a worst case scenario, let me just say we will see gold at twice the Dow. So you can imagine what that means for silver, because I think we're going to see a silver gold ratio possibly 10 to 1 at one particular time. So again, the gains are going to be staggering, absolutely, in a worst case scenario, but not even in a worst case scenario. All of this will correct the fair market value. These bonds, the debt is no good. The collateral is no good. It can never be paid back no matter what they do. World central banks are involved again in this interest rate suppression scheme unlike we've ever seen in the history of the world. We've never seen this to this degree.
Gregory, how does this trickle down to people who aren't interested in investments, people who don't care about the economy? How does it trickle down to the average person who is going to be dealing with it in their daily living?
Very simple. And we're seeing this already. We've been seeing it for quite a long time. And I really hope people understand where this is going. And I've been saying this also for years. We are going to a feudal system, a two-tier society of the haves and the have-nots. If you're a member of the middle class right now, you're in a huge amount of trouble, huge, with no possible way out of it. So what people need to understand is I think at this time they can choose where they want to be. You want to be in the upper part of this or the lower tier. And again, how to get yourself to that upper tier is to understand what you need to do. And that is bet against this debt and become your own central bank. My 2 key prime topics since day one. So Don't hold any more banknotes than you need to. Again, the bills that are in our pockets, they're not even ours. They are owned by the respective central bank and owed back to them, plus interest that they print out of thin air. Period. They're not ours, it's theirs. It's a Federal Reserve note, okay? So what will be yours is a hard asset. And understand, this entire debt-based economic model is failing. How do we know it's failing? Look at what world central banks are doing. Again, the largest debt expansion cycle the world has ever seen. Bet against it. Bet against this debt, because it's going to be a terrible price to pay for it.
Do you think when this happens, I mean, the two classes, the have and the have-nots, do you think that, I mean, is it even going to be possible for the people to have? I mean, the people that have now, do you see them likely losing that position to a large degree and getting into the have-not category?
Some will, but I can tell you this, and we know this to be a fact as well. The richest people on earth, the richest corporations, even central banks, are hoarding precious metals right now. Why are they doing that? Why are they doing that? Why are countries hoarding it? Why are governments hoarding it? Because they understand where this is going. These are real holders of a value. They have been for thousands of years. And just because Ben Bernanke or whoever wants to come out and says that it's not real money doesn't mean it's true. Yeah. Look, world central banks have one goal and one goal only, and that is to continue to push their product. Their product is debt, period. So that's the only tool they have, is debt expansion in one way or the other. You sit here and you listen to Steve Leisman and a lot of other guys on CNBC and whoever else talk about tools from the Federal Reserve. They have one tool, and that is to expand debt, period. There's no alternative. They do not create wealth. They create debtors and debtor nations. Where's the proof of that? The United States is the largest debtor nation in the history of the world, with a national debt nearing $20 trillion and a GDP less than that. So, and we have a country of debtors. Why do most people walk around in this country owing cash? Because of the system. It's a system that's rigged against them. The game is rigged, people, period. So bet against it, understand where we're going, and own things, real assets. This is the key to being wealthy. It's to have things, to be not an indentured servant, having to pay debt back to a credit card company, to whatever. It's to get yourself out of that paradigm. And I do outline all of this, again, in my free 197-page ebook, Ultimate Guide to Money in the Markets, which I urge everyone listening to this to get it. It's free. There's no catches here. So you have to just download it, read it, and you'll appreciate what I'm talking about.
Yeah, we'll have the link at the bottom of the video for sure. Gregory, I can't think of a better way to close off the interview than that. You summed up your thoughts, and you gave some really, really good advice there. So everyone, if you want to check out Gregory Mannarino's work, go to traderchoice.net. It's all free. It's still free, right, Greg?
It's all free.
That's an amazing. He does an amazing service, and you can tell he's very, very educated on the work that he does. So, Greg, thanks so much for taking the time to come on the show with me today.
It's been great. Thank you.